Hello everyone. In this video, I will share some useful tips and strategies to help you with your trading. If you find this video helpful, please give it a like and subscribe to the channel. Now, I'd like to review the USDJPY chart from the past few days and discuss the outlook for the future. Before we begin, let me explain two key points about my analysis method. The first point is multi-time frame analysis. To confirm the long-term trend, I start by analyzing the weekly chart, followed by the daily 4-hour and 1-hour charts. Checking the long-term trend is essential in trading. When making an entry, I also analyze the 15-minute and 5-minute charts. Additionally, I follow Dow theory for my analysis. To briefly explain, an uptrend is defined by higher highs and higher lows, while a downtrend is defined by lower highs and lower lows. A trend reversal occurs when this pattern breaks. If the price breaks below the most recent low after reaching a high, a downtrend begins. Now let's take a look at the actual chart. I'll explain the price movement starting from Monday this week. This is the USD/JPY 1-hour chart. The orange vertical line marks the opening time of the market on Monday. This week, the market opened with a large gap down of about 100 pips. The volatility in the Forex market has been higher, influenced by President Trump's comments last week. In such a market, it's important to be extra cautious with your entries. After the gap down, the price moved in a way that closed the gap, and this created a correction wave in the larger trend. Then the price rebounded at the resistance line of the inverse head and shoulders pattern and started to decline again. Here is a screenshot from the USD/JPY prediction video I posted last Saturday. The pattern I anticipated has played out perfectly. Let's analyze the market again from the weekly chart. On the weekly chart, the purple line represents the support level, and as the price has risen without breaking it, we can conclude that the weekly trend is upwards. However, the depth of this correction and the fact that the price couldn't break the previous high suggests that selling pressure is strong. Last week, the weekly candlestick closed about 5 yen lower, forming a lower wick. Looking ahead to the next week, there's a possibility of either a 3-wave decline or a reversal to the upside after a temporary bottoming out. Next, let's move on to the daily chart. Currently, the downtrend in this wave continues. The return high is at this level, and as seen last week, the price was neatly capped at this level, resulting in a sharp decline. The appearance of this large bearish candle indicates strong selling pressure, so it's reasonable to assume that the daily downtrend will persist for the time being. For next week's scenario, the price may attempt to fill this gap. If that happens, it could form a head and shoulders pattern. The price resistance here corresponds to this line, which is the same width as the range from the previous leg. If the price rebounds at this point, it could lead to a triangle consolidation pattern. If the price breaks through the resistance line from the head and shoulders pattern, the next resistance would be at this level, which is the same width as the first wave. Looking back at the chart, you can also find previous resistance levels. Now let's consider the possibility of an upward movement. The current return high is at this level, so as long as the price remains below this level, the daily chart will remain in a downtrend. Even if there's some upward movement, we can expect to see downward pressure. If you're considering buying, it would make sense to wait for the price to break above this return high, or to consider buying at the weekly resistance level I mentioned earlier. Now let's take a look at the 4-hour chart. Currently, I'm viewing the chart with this kind of scenario in mind, and we're still in a downtrend. The return high on the 4-hour chart is this level, and as long as the price remains below it, a correction may occur. To summarize, the weekly chart has no clear direction, the daily chart is in a downtrend, and the 4-hour chart is also showing a downtrend. Now for next week's scenario, let's first consider the selling perspective. If the price doesn't break this level on the 4-hour chart and a reversal signal occurs on the 15-minute chart, we may look to sell. We can expect the price to fall to this level or this level. Now for the buying scenario, it's recommended to consider buying at lower levels as the price declines. If the price rebounds at this point, we could see a triangle consolidation forming. However, since the daily and 4-hour charts are in a downtrend, we also need to be prepared for a potential reversal back to the downside. The most favorable buying level would be around the weekly resistance line. However, the same concern applies here, as the daily and 4-hour charts are still in a downtrend, meaning there's a risk of a further decline. In conclusion, due to last week's decline, the daily and 4-hour charts are both in a downtrend. Therefore, it's best to focus on selling if the price rises. However, when the price reaches the weekly resistance level, buying could be a valid option. How did you find today's analysis? If you found it helpful, please give it a thumbs up and subscribe to the channel. I hope your trades go smoothly and successfully. Best of luck.